Let's begin with our first topic, which is e-invoicing. This is one of the key tax updates that affects how invoices are issued and recorded across the UAE. I'll walk you through the legislative changes and what they mean in practice. Now, as you know, recently the Ministry of Finance announced the issuance of Federal Decree Laws number 16 and 17. At the same time, some key provisions of Federal Decree Law number 28 of 2022 on tax procedures were also amended. In addition, there were updates to several provisions of the Federal Decree Law number 8 of 2017 on VAT. So this slide provides a summary of the main amendments. The Ministry of Finance recently issued Federal Decree Law number 17 of 2024 on tax procedures. This law formally defines what the e-invoicing system is and gives the Minister of Finance the authority to decide when the system will go live, what requirements businesses must meet, and which entities must follow the e-invoicing law. In parallel, Federal Decree Law number 16 of 2024 on VAT expands the definition of tax invoice and tax credit note so that electronic invoices and electronic credit notes are now officially recognized. It also introduces clear legal definition for these electronic documents. So let's look at these definitions. Now, another important point is how e-invoicing links to VAT refunds. The amendment clarify that VAT refunds will only be processed when a business meets the e-invoicing compliance requirements, whenever those requirements apply. So, if your business falls under the e-invoicing system, you must issue all invoices and credit notes electronically and archive electronic data properly to meet the official record-keeping standards. The Ministry of Finance will share more details soon, covering which businesses and transactions are included and the exact implementation phases and timelines. For now, the Ministry has already published a FAQ page on their website, which you can refer to for guidance. Okay, let's start with the introduction of e-invoicing. So the UAE plans to fully introduce e-invoicing by 2026. This reflects the country's wider goal to keep pace with innovation and drive a fully digital economy. For businesses and government entities, this means a new streamlined way to handle invoices. So invoices will become standardized and automated. Information will flow in near real time, and tax data will be reported directly to the FTA with less manual effort. In short, by 2026, e-invoicing should make compliance easier, reduce errors, and create a more efficient tax reporting process for everyone involved. Now let's clarify one of the main questions in the FAQs. What exactly an e-invoice is? An e-invoice is not just a PDF or a scanned copy. It is a structured form of invoice data that is issued and exchanged electronically between the supplier and the buyer, and it is reported electronically to the FTA. Now, what does not qualify as e-invoicing? You have PDF files, Word documents, images or scanned copies, and emails. These are all considered unstructured formats, so they do not qualify. And it's important to remember that to meet e-invoicing requirements, the invoice must be in a system-generated and structured format that can be transmitted and read automatically by the FTA. We have a few more practical questions that often come up. How will the tax invoice be delivered to customers? Businesses must work with an accredited service provider, in short ASP, to both issue and receive e-invoices. The invoice is sent through the People network using the buyer's electronic address. Another question, what if the company is part of a VAT group? Every member of the VAT group needs its own endpoint with a UAE accredited service provider. When issuing an invoice, you'll still use the group's tax registration number, the TRN, but the endpoint must match the specific group member who is actually doing the transaction. Another question, how can you prepare your business for e-invoicing? Start by reviewing your transactions and invoice data against the official data dictionary to check compliance. Once the Ministry of Finance publishes the list of accredited service providers, you'll need to sign an agreement with one of them and set up the technical integration between your system and theirs to send the invoices automatically. These steps will help you be ready when e-invoicing becomes mandatory. Let's address a few more common questions. Can a business create its own e-invoicing solution? Short answer is no. Only an accredited service provider, ASP, can handle the exchange and reporting of invoices. Will the planned June 2026 date apply to all businesses? So here they're talking about the implementation. The rollout will be phased. So it will go in phases. Businesses will be brought into the system in stages based on specific criteria. The authorities will give enough notice before each stage takes effect. Does the e-invoicing system apply to retail businesses? Currently, business to commercial transactions are outside the scope of UAE e-invoicing. Does an e-invoice need to be in Arabic? No. Arabic is not mandatory. E-invoices can be in English. Now, finally, let's look at the main objectives behind the UAE's e-invoicing initiative. So there are four main objectives. Actually, seven main objectives, but let's go through them one by one. The first one is digitalization, which is basically less manual work and more use of technology to handle tax and business reporting. And then you have efficiency. This is to help cut costs and save time, process invoices faster, and use less paper. Another objective is to minimize VAT leakage. So this helps to stop any mistakes or tax evasion, so the government collects the right amount of VAT. And also digital economy. This is to help support building a stronger digital economy and growing local exports. Here are some additional objectives that highlight the wider impact of the e-invoicing. First of all, economic contribution to help grow the UAE economy and stay competitive by making better use of the data. And of course, security to keep information safe with encryption, reducing fraud and any unauthorized access. And then finally, contribute for policy making and government interventions. So this gives the government real-time data so that they can see which sectors need support and make better decisions. So all in all, e-invoicing is not just about tax compliance. It's a tool to strengthen the economy, improve the security, and give decision makers reliable data for smarter policies. Now, how does the e-invoicing work? Here, as you can see, we have a quick walkthrough of the end-to-end e-invoicing process. So first of all, if you look at the left, this is the starting point, which is the supplier is the one who creates the structured invoice in their own system, and then they send it to their own accredited service provider. And then from there, the buyer will later receive the validated invoice from their own accredited service provider in the same structured format. But what happens in between? So in between, once the accredited service provider receives the invoice from the supplier, they check the invoice to make sure that it meets all the technical and legal requirements. It then confirms the tax registration number and any other key details. Then once verified, the invoice is sent securely through the people network to the buyer's ASP. The buyer's ASP then validates and delivers the invoice to the buyer system. So you need to know, this is important, that both the supplier and the buyer ASPs must also deliver the invoice not just to the supplier and the buyer, but also to the Ministry of Finance and to the Federal Tax Authority for tax reporting. And then once the government receives the invoice data, it goes through the central data platform of the FTA, and there it is collected, validated, and stored, ensuring accurate records for tax reporting and audit purposes. To put this all in simple terms, the supplier is the one who issues the invoice, the ASP checks and securely transmits it, and the FTA records it in real time, making the whole process seamless and fully digital.